All right, how's it going, everybody? We're in the middle of the summer doldrums here, so not all that much is happening out there. So Luke and I are talking about a touchy subject later on. Maybe we'll spend a little bit more time talking about it, specifically that being promotion and marketing in our space. And funny, I call it a touchy subject, really, because it's mostly a subject nobody wants to touch. I don't see it discussed that much. There's mostly polarizing content about it. It's either people, well, promoters mostly, who are all for and only for promotion and marketing, and then there's other people out there who maybe have a reason, again, another reason, typically something to sell you, who are completely against it and they don't want anyone to ever do promotion. So I hope maybe we'll have an educational conversation, Luke and I here. I'll provide my view on things as a service provider in our space, and then yeah, again, I hope it's going to be educational. And then there's some other junior news in there as well. Although again, not all that much is happening with juniors, as I just mentioned. I for one still keep getting a bunch of no shows. Companies that had scheduled an interview but are not actually showing up when time comes for the interview. So I don't know. We do seem to be in the slow summer period that everyone always talks about, and that's more probable, I guess. People just don't want to look at my face in a nice sunny summer day. Although in Belgium we don't really know what that looks like or what sun really means. But so that's what I have coming up here with Luke. But Luke, before I have before we go into this, I have my own rant that you're gonna have to sit through with weekly metals overview. Not all that much was happening last week, and if you're looking to get positive at all, that is. Matter of fact, the best performing metals last week were lithium, manganese, vanadium, and molybdenum, all of which closing the week literally flat. So that's at 0.0%, nothing, like zero, right? So when the best performers are dead, then you can expect that the worst performers were hurt badly, more badlier. Is that a thing? I don't know if that's a thing. With so tin was leading the losers last week, 7% lower. It closed last week. Silver closed below $30 and almost 5% lower, and zinc closed 4% lower, followed by platinum and copper, both of which down about 3%. Both of which below what used to be key support levels too, and now likely or supposedly key resistance levels. And that's really what my overview here will be about this week, because the main loss leader is, of course, China. There are worries that the demand recovery from base metals from China won't be there like we thought it would, particularly because the Chinese government didn't pass a new stimulus last week, which is, I suppose, expected to be targeting the manufacturing and construction sector, once again hammering in on the point that they want to move toward being an advanced technology economy as opposed to a construction or a manufacturing based economy, if you will. Now, is that the right choice for China? I know some of you will disagree with what they're doing, of course, but I've also been seeing some comments on some of the previous videos from some of you who do support essentially what is the industrialization, especially in countries like Germany, for example. There's many German viewers, surprisingly, so shout out to you guys. But so to everyone listening, actually, let me know, what do you think? I mean, let me know if you think China is making the right move here. I think I disagree, but I also think yellow snow is delicious, so I shouldn't be blindly trusted. I want to know what you think. Now, as a reaction to this drop, and this was not only felt in base metals prices, by the way, it was also felt in Chinese stocks, and then everything really related to the manufacturing sector in China, which is, of course, a large part of the economy. And so, as a reaction to that stimulus not being announced, China cut their, or to the dropping prices, which was as an effect. You get it. China cut their policy rate as a reaction to that. So very unexpectedly and very unaggressively too. I have a Bloomberg article here that reads, quote, China unexpectedly cuts 1-year policy rate by most since 2020. So essentially this is rate cuts, right? This is what it is. Most analysis I could find out there, and this is not my analysis, I don't have enough brain cells to do any of that, but so most analysis I could find out there said that this won't have much of an effect on the consumer immediately, but it does fit within that same framework, right, of wanting to be I don't know, the East Silicon Valley, if you will, if that's what you'd call it. I mean, we do know that money losing companies do like free money. So again, maybe it works out for them. But I have my doubts, of course, given that we don't need more tech. We don't need more free money, but we do need the metals supporting the implementation of any type of innovation on any meaningful scale, any scale, really. So anyways, China also cut their reverse repo rate, by the way, to 1.7%, which is not much on an absolute basis, but relatively it's a lot. I mean, it used to be 1.8%, and especially in combination with the now 3.35% 1-year policy rate, which, do note, came in before the Fed has started cutting rates, indicating that the slowdown in the Chinese economy is now a more important objective to manage, if you will, than the currency war that they were or are allegedly in with the global West, or the U.S. specifically. Let's just call it the U.S. And so yes, a big deal. They're going to 1.7% reverse repo rate and 3.3% 1-year policy rate. Now, why I'm bringing all this up, and especially the currency war thing and whatnot, besides wanting to look like a conspiracy theorist on the internet, is because gold and silver's move this week might also be explained by this. I say might because I don't typically like explaining moves based on what's happened before. Hindsight is 2022, and sometimes things just move because they moved, not necessarily for some very exciting macro reason. But so gold and silver's move last week might also be explained by this whole thing, where we saw some strength in the USD because, again, the Fed looks like it's going to be the last central bank from the major central banks to cut rates, essentially winning the currency war, if you will. And so it resulted in strength in the USD, resulting in lower gold prices and silver prices too, with gold falling and closing last week below the 2,400 support, and silver is now well under 30, under the $30 psychological support. Some of these things I say and I also want to barf, but I know like it is supposedly a real thing. So with the downward pressure here really is expected to continue if the Fed doesn't indicate potential rate cuts in the near future, which is something we'll know very soon, or might already be known by the time you're watching this. Again, the posting schedule of these videos these past 2 weeks is a little messed up. Hopefully it gets a little bit on track soon, mostly because of the no-shows, and there's a bunch of other stuff that are going on. And this episode is normally with you by Monday. It's up on the West European Monday evening. But I think this time it's probably sometime midweek that you're watching this. I'm gonna aim for Thursday, Wednesday, or Thursday, so we'll see. But anyways, in addition to the Chinese economic woes, gold also suffered from a report that came from the Chinese Gold Council, showing that demand for gold bullion fell almost 6% year on year, and especially painful the fact that the Chinese central bank apparently stopped buying gold in May and June, which 24 months ago, so a couple of years ago, it wouldn't have been such a big deal. Nobody would have been talking about it. But we just went through a year and a half, so literally 18 months of uninterrupted central bank gold buying on the Chinese side of the globe, and that's now slowing down. Essentially it's gone. They didn't buy any gold in May and June, so for 2 months in a row now. And the rates are falling. They're focusing on tech. And I suppose the story kind of writes itself at this point, right? So with all that, it seems that both base and precious metals are in for some headwinds over the next couple of months. So short term, at least before we get more certainty around the probability of when and how many rate cuts we might expect this year, if any. With, in my opinion, when being the more important answer. Of course, an uncertain year because whatever else is happening in the US, which like most of these days, I just look at what's happening online and I feel like we just might as well be living in a simulation, and this is all within the spirit of trying to be a conspiracy theorist on the internet. I'm kidding, of course, but I mean, weird stuff are happening out there. However, I by the way, I do want to note that the longer term, couple of years out, there is no major reason to be bearish on gold, in my view. Again, I will call up on you, the viewer, the listener, to add on to what I'm missing in here. This is obviously just a very brief overview, just basically me regurgitating news of what I've read. But the clear trend for gold over the last 5 or so years is up, and up very nicely, very strong trend, outperforming many asset classes out there. A lot of demand, a lot of central bank gold buying and whatnot. So to stop that trend, we need a way larger event than China pausing or stopping or slowing down their gold buying. We'll need an event of sorts, like for example, the permanent death of QE. Like, I don't know, there's a new JP, a new Jerome Powell that comes on and says interest rates are going to 20%. QE will be no more. We're going to a 1980s economy or whatnot, which at this point just sounds like science fiction. So it's not going to happen. We all know that realistically, it's not realistic to expect QE to end at all. We'll keep seeing money being exponentially created, pumped into the economy. Inflation is just not ever going to be 2%, not that it ever was. And debt will keep spiraling out of control. And so, on the back of a continued upward trend in the gold price, which confirms that belief and also that inflation expectation. Again, there is no reason to be bearish on gold over the long run, and neither is there a reason to get bearish on copper over any meaningful time frame, especially provided the amount of money that's currently going into copper M&A is already sending you a signal as to where the smart money is moving. Last week, or was it the week before that? I remember there was a rumor that BHP and Lundin want to bid for Philo Corp, whatever you want to call it. So potentially more news on that next week as well. Yeah, it's also a topic that I hope we can cover more in depth in the near future if we can get someone to talk to us about it. In the meantime, though, over the short run, all the noise keeps coming in, right? Everything else keeps coming in. Last week was the same whole shebang in terms of jobs data and whatnot, but I won't bore you too much with the details, and I'll sum it up with my favorite saying or whatever it is. Good news is bad news, because the economy, although absolutely, unlike me, not in an absolute perfect shape, is still holding up pretty well and much better than what most people I interviewed over the last 2 years told me it would. And I mean, just walk outside and use your eyes and you see that. I see the grim headlines too. I see a reason to potentially get worried too. And I'm going to catch a lot of flack for this if someone's still listening, but the economy is just doing better than anyone expected over the last 2 years. Well, specifically from the macro doomers that I would interview every now and again. So I suppose there's a lesson in there too about talking heads and yada yada yada. But I might be left looking for a real job if I teach you that lesson. So jokes aside, that was about the main driver of commodity prices last week, or the main thing that I wanted to mention here. China, with their whole not buying gold anymore, lowering rates, wanting to become the East's, what do they call it? The Silicon Valley of the East or something like that. But Luke and I have a long conversation to go through. So Luke, I'll shut up now and jump right into the juniors here with you, because the first one that you've highlighted for me is Golden Shield Resources. So that's GSRI. It's well, obviously you've highlighted it, so it's another nano cap. It's a sub $4 million market cap company. E-liquid, for people listening, these things are not a joke. If you continue listening to this part of the conversation, you should read the disclaimer and actually understand that these things are not a joke. You don't know what you're doing. Be careful with these things. But so yeah, this is a sub $4 million market cap company that's gone up on a bit more than $100,000 worth of trading, which actually, sadly, it kind of sounds. I mean, for a serious stock exchange, this would be I don't know, a couple of minutes of trading or something like that. So this is not a lot of volume, and this stock has doubled on $100,000 worth of trading. And but so yeah, Luke, you've noted on here that they had 4 news releases this week. So is this but this is already starting to smell a little bit like a Luke special, if you will. Is this what's happening there?
No, I wouldn't consider this a look special because it's not something in this case I would buy myself. But let me just say that I have a little bit more focus on, or a bit more focus on the Canadian markets versus the Australian markets. That's why I looked at the number one of this week. There was no news or nothing special really. So I tend to skip over Australian news a bit more than the Canadians. If people really like to see more Australian news, then just comment on that. But Golden Shield is a interesting company. I followed it a little bit, considered buying it before this news, a couple of months before this news, mostly because Leo Hathaway is involved and he has worked together with Ross Beatty in the Lumina group for a long time. And I understood from people that he was also one of his most important advisors from the geological point of view. So, I mean, that makes him immediately a credible person. And then when you start running a company, somebody like him, gets a little bit of a sort of premium, not in the market cap because it was a really cheap company with an exploration project in the Golden Shield. And apparently, their business is too risky, or maybe it's not going well enough, that they decided to partner up with a bigger company, a private company called Tucano Gold, and they have a near producing gold project. And I don't know who put Tucano Gold together, because I think they only acquired this project recently. And this is well, not a very big gold mine, but a fairly sizable gold project that was in production before, and they are planning to bring it back in production again. What is always of interest with these deals is, what will it really bring in terms of value or potential value to Golden Shield? And Golden Shield will only have 13% of the company, and Tucano Gold 87%,
Hmm.
which I have been, involved in these deals when I owned a private company, and or the other way around, and you become a shareholder of the combined entity, and you wonder, is this, are those other shareholders of this other company, which I don't know yet, loyal, and or are they, or is it going to be a liquidity event for them? And that's, I think, the key question when a private company becomes 87% owner, or the private shareholders of this new publicly listed company. So I think the key is there. And I think the second thing is, this is a gold mine, or to become gold mine, so it needs to be financed, and it needs, stability in gold price. I mean, these projects typically benefit from a rising gold price because it's one project, and a lot depends on the gold price. Then they need to get a financing package, and when they have a bit of a lower gold price in a time that they are ramping up, it's difficult. So I always find producing companies a bit risky, especially one project companies. So I consider this a risky but interesting project, and it all depends on the quality of the project, like always, but also gold price, who is going to finance it, and who are the shareholders of Tucano Gold.
Hmm. And how many of them there are too, I suppose, is
Exactly.
one thing that I learned from you. But essentially, is this really a move that is pointing towards optimism in this specific stock? I don't, I'm not sure, because it basically just went up to meet the price that it's going to be valued at after the deal. So it says the foregoing exchange ratio implies a value of 8 cents per Golden Shield share, and the price on the stock exchange just went to 8 cents. So it's basically just meeting that threshold. That's it. I mean, it had, if it had gone, had when, I need to brush up on my English. But if it were 16 cents right now, it would have been different. But this kind of seems more like just a re-rate of some sort.
Yeah, well, the shareholders got an immediate re-rate because they were looking at a much lower share price, and so they got a bit of a re-rate. But if you invest in a small company like this, you typically look for 5 or 10 bagger material, or companies. Otherwise, why would you even take that risk? And now they combine with a company and become a gold miner, or potentially a gold miner, because it's not a mine yet. They need to put it back in production. So they will roll it back, and it becomes a $45 million company after the deal. And I guess there will be more financing soon. So probably a $50 million company soon.
Mm.
And then soon after, they will probably do another financing to get things going. So this becomes a pretty sizable company, and I think everything then depends on yeah, really on the team. And I guess if they can get good people involved, maybe even Ross Beatty himself, and maybe it could become a Lumina group company. then financing becomes easier, connections are easier, and good engineers are, everything becomes a bit easier. So I think a lot really depends on who are going to be involved here. And indeed, if Tucano has 200 shareholders who invested at a third of this valuation, yeah, then of course you have a big risk of a selling event, a liquidity event. Um, uh, of course, there's probably still going to be limited volume because all these small miners have limited volume. So I think a lot depends on the details here, especially in this sort of weak gold environment still. Uh, so it's difficult. I really find it difficult to say if this has a good shot on becoming a profitable company for investors. But with Leo Hathaway involved and potentially becoming a Lumina company, it has that potential. But it becomes a completely different type of company than it is really right now, as it becomes from a $3 million company, it goes to become a $50 million company. So then you need different types of value advances to get also a market cap advance. Can this company become a $500 million company? Who knows? It needs to be one of the better one project mines than in that case, a G mining type company.
So it may have the potential to become a Luke special stock. It's not yet one. It's also, this reminds me of a quote that, or something that Rick Roll always tells me, is something along the lines of both big mines and small mines have big risks, but it's only big mines that can make you big money. It's something along those lines. And I don't know. I see too many small companies trying to get something into production and grow it that way. It always is way more challenging than anyone ever expected, and their stock price rarely represents the value of the underlying asset. So I typically ignore stuff like that when I see them, but I do get the point that it's becoming a different company led by a different team that could take the stock to different heights, essentially.
Yeah, when you think about West Dome, for example, which is a one mine, or maybe two right now, but at the time I think a one mine company, and also Crocodile Gold. Both of them made a very big discovery, Kirkland Lake. Crocodile became Kirkland Lake. West Dome is still West Dome. So existing miner with a bit of cash flow, looking for new discoveries. Maybe that's going to be their sort of promotional model and also their business model. And sometimes you need a bit of luck as well, right? I mean, sort of base case, this is just a mining company. They need to finance and bring this 2 million ounce company back in production and potentially produce, just say 100,000 ounces or 150,000 ounces a year. So a small producer. And with a bit of luck on the drilling front, maybe they make a new discovery at depth and it becomes a much more interesting play, or it becomes an acquisition, an M&A type company that merges with another company. So the direction, I mean, at this point is probably difficult because you need to talk to the company. So what is the vision here? And they will probably just say, bring this back in production and explore, but perhaps they have in mind to become an M&A type company, to merge with someone, or to maybe just drill and focus on this project alone for the coming year or so.
Yeah. It's interesting to talk about this. I don't have much else to add here. Also, because I'm actually already kind of moving forward to so I was looking into the second one that you've noted on here, which is Alaska Energy Metals. They had a very interesting news release this week, two news releases actually, that we're going to talk about. But I want to maybe spend more time talking about it. So I want to move that toward the end of the conversation that we're going to have, because this is an important topic regarding marketing, spending a lot of money on marketing, the effect thereof, and there's a bunch of interesting things that I think you can tell me about Alaska Energy Metals, maybe not in particular, but just generally how promotion goes in the sector. They are also a client of mine, so we're going to talk about that as well. But what is a Luke special stock that I also see in the list here is SRQ Resources. So that's a stock you own. I believe you still own quite a lot of it too. You forced me physically, you forced me to buy the stock. Like you took my hand and pressed on the button. So I'll be on your doorstep when it doesn't work out for me. But it's actually working out so far. I had I believe my average cost is around 15 cents, 17 now. So I'm not gonna raise the big party yet, but it just went up this week. So that's pretty much it. I mean, it went up some volume, $63,000 of volume. I mean, for stock exchange, still low. I mean, it's a low number of volume. High for this stock though, and it went up 55%. What's happening with SRQ?
Yeah, there's a bit more volume because this overview doesn't include Friday yet. But yeah, and I have to caution, we both own it, and I own quite a bit of it at 11 cents average, more or less. But it's a very risky play. But I saw the news release a couple of months ago about the visuals, and I didn't expect them to have a economic discovery already. I was thinking about this is probably not gonna great, but what they found from a geological point of view didn't fit their market cap, and there was a lot of stock available at 9 cents because it was probably there was an iceberg seller, and I think it was a flow-through fund, which typically buys stock and just sells for a tax reason, and they don't care about price really. So I took that stock mostly out on a 9.5 cent level when that news came, and that's why I own a pretty big position. And I was surprised that the stock went to 45 cents within 1.5 days,
Hmm.
which was a bit too much, I guess. I'm a little bit surprised the company didn't use this event to finance. Maybe not finance at 40 cents, but somewhere between 20 and 30 would have been would have made sense, I think, if you look at the chart, because it was trading there for about a month. But of course, then the essays came, which in my eyes were anyway not. I wasn't expecting that much from it, and the market apparently was because they sold off on it. Um, Nothing happened last week, and the reason I wanted to cover it this time a little bit is because I was surprised myself that the stock suddenly started coming back to 17 cents from 9. It briefly touched 9 cents again without news on okay volume, because it's a very low liquidity stock in general. The only thing they released on Twitter was sort of a model that they found this magmatic intrusive complex also on surface, and they mapped it out a little bit. They didn't release this in a news release because I don't think there's anything news other than just a visual representation of what they think they have so far. And I don't think this was the reason for the move. I really have no idea actually why the move happened. It looked a little bit like a financing move, where sometimes you see a bit of volume coming in the days ahead of a private placement. I talked to the company recently. I didn't get the impression that they were working on a financing, but they don't want to talk about it either. So it's really speculation. And I've got one chart here of Go Metals. That's quite interesting because Go Metals made a visual nickel discovery in 2022. I just arrived at Beaver Creek that year, and the news came out. I couldn't buy it because it was a CSE listed stock, and I didn't have any money in my one account that I can use for CSE listed stocks. And the thing ran from 8 or 9 cents to $1.20 also in a number of days. People were talking about the next Voices Bay potentially, and and that didn't happen. And also here, when the essays came out, the stock just crashed. This company did finance at $1.20, which was good for them. And the stock came back to a very low valuation, and they never really found something since then.
Hmm.
But there's a bit of a difference here. I mean, this project of Gold Metals is in a difficult area. They have to do helicopter fly in, fly out. It's a it's a very it's a different story, but it's also a bit comparison. You can compare it in a way that it's a Quebec company with a Quebec project with a visually interesting news release, people buying it on dreams, selling it on reality. And in my eyes, I didn't buy SRQ on too many dreams. Of course, if it's a big discovery, it will be a 50 bagger or a 20 bagger, but that's far away still. Hopefully, in the next drill program, they can drill that big target that they have, which they call Target 900, and this north zone, and make a discovery. Of course, that would completely change the game, but you can argue that for every company that's drilling for something.
Yeah.
So long story short, uh, I have no idea why the stock went up. So people could think, why did I waste these 5 minutes of my life listening to this?
But well, I think the very first wording there when you started answering was important, that this is risky. I mean, they're gonna need capital this year. Fact.
Yep.
When and how they're gonna raise it is gonna determine a lot on this stock. So you're betting bigly on the CEO here. We did a couple of interviews together, maybe one interview with him or two, and then I did one last time when you couldn't join us, and we basically talked about this. So the financing risk there for sure, the discovery risk there for sure as well. And then you have the biological refuge or whatever they're dealing with is like a plot of land where they want to drill that they're not allowed to drill. That's how I'm going to simplify it. apparently how the CEO explained it to me, it's mostly paperwork and they're gonna get through it supposedly,
Hmm.
but they're not through it yet. So this is, I mean, it is as risky as it gets. Not a huge position for me. I bought after the fall, as I said, at 15 cents, fell to 10 cents right after that. So it's a 33% drawdown, and these things are normal, basically no volume. It's gone up now. Why? I mean, I use uh, obviously the best research tool available on the market where you should trust everybody being COCA. Um, said no one ever. But no, I mean, I look at the comments on COCA. Obviously, you shouldn't use them as research. I'm just kidding. Um, People are saying that there's one large buy driving it up, and asks are building again below it, so you can see these things on level 2. What's level 2 data, by the way, saying you on SRQ? Is there a lot of bids, asks? What's building up?
Yeah, it's a bit of a funny one because indeed, like I said, there's not much bid, not much ask. There was a bit of volume, probably $100,000 driving this move from 9 cents to 17.
Mm,
Um, I always look at, are there certain signs? If you look at enough deals and enough companies on level 2, sometimes you can recognize things. I have once predicted someone coming in a stock just completely based on looking at the different houses involved and how much they were buying and in what pattern they were doing it. And I compared it to other 3 or 4 companies that investor was involved in. And I found almost like a complete match. So I decided to buy that stock on the potential of that investor coming in, which then happened, and the stock doubled on that news.
mm,
And I see a little bit here like that, but I'm not as confident as last time. I really have no idea. It looks a little bit like something building towards a financing. Uh, Normally, I have a pretty good idea, like 2 or 3 scenarios, like why is this happening? And in this case, I'm a bit surprised. The company was very cheap, is still very cheap by comparison. But nickel companies in general are cheap right now. Nobody's interested in nickel, so I cannot really. I mean, financing is a risk, but financing can also be an opportunity. But that would be in case of a good investor that surprises the market. Like, why is this person getting involved with this tiny company that I've never heard about? That is sort of the potential
mm.
upside, in my opinion, very short term, but also the downside if that financing is sort of a flow through one at at 14 cents. So financing is very important indeed for this direction, and then geological news potentially from the ground, and then EM geophysical news, and then drilling. So this company, you have these scenarios, and if they make a big nickel discovery, and again you can argue that about every company with this share structure, it could become a 50 bagger. But I almost never take that scenario serious because it almost never happens. So it's almost like a throwaway scenario, like dream on, and then you work with 2 or 3 other scenarios. So I think the financing is the most important thing. Like, how long can they continue to do their work before they run out again? And they still have 1 million, I think, so they are not running out, but it's getting close. So the first thing is a good financing. That's what I'm personally hoping for, and I think that should happen within a month or 2, and maybe much sooner if this move is related to financing.
Yeah, and then dream on, as you said. I mean, Aerosmith would be proud of you, but it's this thing could have also just happened randomly. Like someone suggested again on COCA, saying like maybe someone just hit the maybe someone just bought some shares, but instead of a limit order, they placed a market order, and
No,
they kind of got filled on everything that was on the ask, and the
no,
stock.
that didn't happen. I think there were
Okay,
there were many houses involved.
okay,
You could, with a cynical view, you could say this is a bit of a coordinated effort.
okay.
This was not one person, unless that one person has 5 different accounts and was using those 5 accounts to really drive up the price. But why would you? I think if you really have time, and I think in this company you have a bit of time right now. That I don't know the financing, whatever is coming from it, but I don't see any driver other than the financing within the next 1.5, 2 months for the stock to really move on drilling news or something like that. So
Mm.
to me, it seemed like interesting. There's several people buying the stock, and it's $100,000. Let's not compare it to Apple or Google, but it's still something for a small company like this, and that's why I was a bit surprised. And then we'll perhaps find out soon what was driving it, and maybe not. But there was something behind it. I just don't, I cannot say what it is because I have really no clue other than the financing potentially.
Okay, well, I want to keep it moving then in that case,
Yep. Yep.
because we have two more, that being Nevada King Gold Corp and Abcourt Mines. Nevada King Gold Corp, I used to talk to Colin a while back. I haven't heard from him, so I have no idea what's happening at the company. Large company too. It's up 37% this week or something along those lines, but it is actually about 70% in the last 2 or so weeks. On not a lot of volume outside of one day that had exceptionally large volume. What you've noted that they've had two news releases. What's happening there?
Yeah, this is a company that I've never bought stock of and was never really interested in. They have many interesting drill results if you just look at it from a distance, like 100 meters of 1.5 grams and 80 meters of 2.5 grams, 6 grams over 70 meters, 80 meters of 5 grams. And now they came with this news release, which the headline was Nevada King intercepts 6 grams over 55 meters, hosted entirely by intrusive rocks, extends mineralization underneath the south quartzite ridge, opening up extensive new target. The reason I bring it up, because I am not an expert at this company, I didn't follow it in detail. Like, what can I really say about this? Is how can you really? I think the only way you can really buy this company is for two reasons. One is if you really understand this existing deposit well and why this company thinks they can find something new. Why is there value in this company that's trading at 130 million? And because there's so many drill holes, if you are a person like me, or I think you, who cannot really plot all those holes in a program and see how it works together, how this deposit is formed, there's so much data out there. How, as a retail investor, can you really invest in a smart way with so many drill holes and this company looking potentially for something new or a new target? The other reason you could buy this stock is because it's run by people who know how to run a stock. Colin Cattell owns 62 million shares, and they have Michael Parker. He owns 20 million shares. You have Eric Sprott, I think, still in this company. Paul Matisic, which was related to Frank Justra. I mean, there's a lot of people around this company who have made things work in the past, big companies, and that could be a reason. But I find it difficult. If you look at this drill result, in the headline they say it's opening up. It's very promotional. It's opening up new target area. How can you really know this is true and that this is impactful? I have no idea, because it's comparable to some other drill holes they had. So my point really is, like, I think you can only invest in this if you really think you understand how these people work and how they create value. They also do a spin out, so that could give you sort of an extra bonus stock. And these people know how to make something work, but at these market caps, you also want to understand what it really means, this drill hole. And apparently the market understood it, or the people behind the company understood it, because the stock really went up from 25 cents to 40 in a very short period of time. But my point really is, like, how can you invest? It's maybe even a question to you in something like this. If you, how can you put this drill hole into perspective to compare to all these other hundreds of holes they have drilled on this project if you're not a geo yourself and you cannot map these things out?
I'm kind of stressed because I'm getting questions here, and that's not how the interview is supposed to go. But no, I'm kidding. It, First of all, 343 million shares outstanding is already kind of an eyebrow raiser for me. I'm like, okay, what's happening? What has happened in the past? And looking at the chart, I mean, there's been dilution. You can look at the chart of the number of shares outstanding and how that's evolved over time. So there's been inflation of the shares outstanding for this company. What has that resulted in geologically? And where does this thing fit in? And it's mostly, you go back to the old, again, I'm bringing up Rick Rule, the old unanswered question thing. Like when they set out to drill this hole, what were they hoping for? And is this part of the result? But you should have known that before they actually drilled the hole. You should have known like you can ask the company, you're going to drill this hole. That's what I did at the Rural Symposium, by the way. I went around and I asked, like, okay, everyone's got unanswered questions. What question are you answering? And once you've answered it, what is that going to do to the valuation of the company and why? A lot of companies, they were like, well, I don't know about the valuation. Maybe that you should decide for yourself. I'm like, no, I mean, you should know why you're drilling this and how much value this could add to you, and whatever ways you use. I mean, comparables, or I, I don't like using ounces in the ground and stuff like that to value companies, but EV to ounces in the ground, whatever way you can use to potentially justify it, just explain to me, what do you think this would do to the valuation of the company and why? That's a question that the company should answer for you, and then you can go ahead and double check it to see if that's true. That's kind of how I would approach it. But again, with the number of the shares outstanding in mind, knowing that there's been significant inflation in the number of shares outstanding, and what has that inflation, or what has that dilution resulted in? That's, I don't know if I'm saying something here, but that's kind of how I think about it.
Yeah, and companies like this sometimes they have an old project and it's still in a strategic area, so they could at some point, they could prove enough that a company in their region, sometimes even a company with the same size, merges with them. And what they then bring is, this marketing power. They have a lot of wealthy individuals behind them. And if you are a small miner in the area and you don't have that, but you do have this producing mine, and I'm just making something up right now, but these things happen quite often also in Nevada mostly, I think. Then you bring things together, and maybe this project is not worth. I think this project in the hands of most. That's my guess, by the way, but in most pr- promoters or most CEOs would be at a much lower valuation. But when you have these people who can raise money, who can get it going, that's worth something, and that's why it trades at these valuations. So I personally have difficulties to really know how to deal with projects like this, because they have this sort of big project where they know there's a lot of gold, quite a bit of gold, and they want to grow it. But what's the ultimate, 3 or 5 year plan? What's indeed the unanswered question, but also within a certain time frame? Because if in mining projects the time frame is 10 years, then it's very difficult to make money. So what is really going to drive this? And yeah, again, I find it quite difficult, other than them being involved, these people being involved, and know how to make a junior mining stock work, which is really 80% of what you need. I think a lot of people have an interesting project but have no idea how to make it work, and that's not the problem here, I think.
Yeah. Um, comparable impressions that I have to it is just not something I would typically get involved in at all, and it's harder to understand all of the moving parts. Whereas with one pre-discovery or a discovery company, there's maybe one thing that you have to think about and understand. Here, there's many angles that could influence the share price both ways, up and down. I mean, especially looking at the stock and how it's behaved over the last year. Again, a lot of volatility. There's a gap up, then there's a gradual decline, and so on and so forth. 3 years ago, it was a lot higher. But again, you think about dilution, you see the number of shares. It's just too many moving parts for me to start thinking about. But talking about the number of shares outstanding, the next one that you have on the list is Abcourt Mines. It's gone up 29%. It's got 570 million shares outstanding, and this is not an Aussie stock. And apparently, they've done a $4.5 million financing with a new, creating a new control person is what they call this. But this is a $25 million market cap now. Yeah, what's up? Why is this going up? Why did you have it highlighted?
Well, there's 700 million shares outstanding, and 300 million warrants and a couple of options. So it's about a
After the
billion
new
shares.
financing?
Yeah, yeah.
Oh, wow.
So a billion shares if you include the warrants. So most of those warrants are pretty close to the current price. So that was not the first thing I saw. The first thing I saw was this 4.5 million placement and the new control person. And I looked at the name, didn't recognize it, started looking for it, and saw that he was the founder and also involved with Aya mining for a very long time. Aya Silver and Gold, I think it's called. And that's one of the real darlings of the industry for the last 5 years, I think. Let me quickly look at the chart. Yeah, it started really running in 2020, and stock went from $1 to $17. Really big company, doing well in Morocco. And I was thinking, okay, if the founder of that company now gets involved in this company and pays 4 million, puts in $4 million into this 4 cent financing, gets a lot of warrants for it as well. But if you have someone who can really make the difference, that's typically news that I look for, because most people don't recognize these names immediately. I didn't. Nuruddin Mokadem. But sometimes these people have a level of influence that's not known by most retail people, and it takes a bit of time before a stock reacts to names like this. So I thought this could be something, sort of my specialty, if you want to talk about my specialties, where recognize these type of things. But I think what I realized after a bit of due diligence is that this person indeed founded Aya, but left in 2020, about at the time when the stock started running. So maybe the new management that came in was instrumental, could be a reason. Maybe another reason could be that it was right around PDAC when the stock dipped and then started running. So I don't want to say that him leaving was the reason for Aya doing so well. But he was certainly not involved in the period when the stock, in the last 5 years, when the stock really went from $1 to 17. And typically it needs real skill to let a junior miner go from $1 to 17 for a prolonged period of time and really build a business out of it. And even though I don't want to take the credit away, I don't know, he was probably very involved for those 10 years he was involved in that company. But I cannot, it's a bit different when he was not involved in the real value driving events that happened over the last 5 years. And that's why that was a bit of a sort of negative surprise when I saw that he was no longer involved. And the second thing is that I found out that Abcourt now has about 1 billion shares out, fully diluted, which makes it, in my eyes, extremely difficult to make anything work. But what are they doing? Because we talk about shares a lot. Most people may think, why do they never talk about projects? To be fair, I don't even look at the project when it doesn't fit the criteria. And in this case, they have a mine, Sleeping Giant mine and mill, and they have also lots of projects in Quebec. And when you very briefly scroll through the corporate deck, the first impression you get is, this is a company that's promotable, and if the things are close to what they say they are, and it's prospective and you can explore, and there's a lot of reasons that you could consider a company like this. But the $1 billion share count just killed the even looking into it for me. But so for the moment, I don't even care about this company because of the share structure. And that's why I cannot say more. But these are often the reason that I get interested in a company. And if a couple of things would have been a little bit different, like him being involved in Aya, I would have probably, in the last 5 years, I would probably have considered this company, but maybe not with 1 billion shares out. But the point again is, sometimes these type of news releases, somebody getting involved can completely change a company from being a $5 million or $10 million company that nobody cares about, and within a year, a $100 million company that everybody cares about. And that's why I think you should keep an eye on these type of news releases. And by coincidence, I've got a service coming that that sends an alert when a name is mentioned in a financing strategic investor. But it was not even the reason I put it in. I just think of it right now. Everybody would think, yeah, of course, but that's true. It doesn't really matter. This is what I look for, and in this case, it wasn't enough to buy the stock.
That's news to me about the service that you have coming up, but it kind of makes sense, and I hope you can tell me more about that. But it kind of makes sense thinking about the presentation that Dave Lotan gave at the pre-PDAC Red Cloud event. People can look for, you can just look up Dave Lotan pre-PDAC PDAC on YouTube, and they can see he gave a presentation there, 25 minutes, talking about the network effect within junior mining as to why do stocks go up. That's something Dave is fascinated by, and you helped him put that presentation together, as far as I understand it. So it makes sense that you'd have a service to complement that. And as far as Aya goes and Nordin's involvement, I don't know the gentleman at all. Aya has hit it completely out of the park. It's done tremendously well. Obviously, it's an almost $2 billion market cap company. It only had one share consolidation, one rollback. I'm thinking it was a 4-for-1 or 1-for-4 rollback. So it's and it was in 2018, and they have 130 million shares outstanding now after that rollback, and their stock price went up. So there is that, but so what I wanted to say here is that it's not only, I don't think promotion in and of itself can create what Aya has achieved. You know,
Right.
keep the shares outstanding as low as they have, and I mean 130 is not eye-catchingly low, but it is when you know it's a $2 billion market cap company that's only done one rollback, which was prior to the stock actually having its two biggest runs. It's really gone up in two runs, which was, as you mentioned, 2020 up until like summer of 2021, and then November of 2023 up until now. It's still running actually. So I don't think you can have only promotion do that. I think the asset uh, I mean, the asset is responsible for the stock price going up, for the value to be represented. Promotion does have a certain role, of course, in it. And this actually might be a nice segue into the last mover of this week that you have on here, which is Alaska Energy Metals. They had multiple news releases actually regarding promotion. It's gone up 90%. So it's almost doubled this week. Very high volume, $5.5 million. This is a small market cap company. Also, as I mentioned, they have 113 million shares outstanding, so 113. I do think they did have a rollback though when the company got restructured. But yeah, I mean, what caught your eye? What do you want to talk about here regarding Alaska Energy?
Yeah, and the volume was even higher. If you include the full week, there was $16 million Canadian. We are looking here at US dollars, so um,
16.16.
16 million. Yeah, Canadian. This overview was made on Thursday, and I think it should have even been more than the five that I've listed, 5.5 US that I've listed there until Thursday, because I think at that point there was already more than 5.5 million US. But anyways, there was 16 million Canadian over the whole week, which was similar than the first, not the first 7 months, like the from February 1st up to July 18. There was similar volume. So that 1 week last week was just amazing. So what happened? There was no news other than them putting out a news event, them being Alaska Energy, because they have been requested by OTC markets in the US to provide more clarity around promotion and who is involved. And there was a big list of companies providing marketing and promotion for them. And I found it quite fascinating. I looked at the list and started looking at what they were doing, and there was $1.5 million spent on marketing in the first quarter. So this company, really focuses, or I could say focuses on marketing, because it was more marketing spent than project spent for sure. Not that it's always. I don't want to put marketing and promotion into a bad thing. Junior mining companies typically have no revenue, have a story, have a dream, a thesis, with hopefully with smart people trying to get something done. But the chances of really getting that thing done is always, making a discovery or whatever a company is trying to do, almost never happens. So that's and the only way to get people interested, at least to reach out to people and tell your story and get a chance to get people to believe in your thesis. So I'm not against promotion, but it was very interesting to see all these companies listed in their news release. There was also even some mention of consultants selling stock and buying stock. So the 16 million can only be explained, in my opinion, because of marketing and promotion. There were about 20 or 30 videos on YouTube about this company in the last couple of months. So there was a lot of promotion done. And that's because they have a nickel project and a nickel thesis that they're trying to convey, uh, mostly through US channels. And that's why I thought, let's just bring this topic to promotion a little bit and talk about, a lot of people think promotion is bad and you should completely wipe all these channels out. Other people think promotion is needed. So I think it's a topic that's not often discussed because it's sometimes feels a little bit like a topic that's controversial, and I think it is not. So I think that's why let's just discuss a little bit what types you have, and does it make sense? Is it fair? Is this too much? What does it really mean? So that's why I
Yes,
wanted to bring it up.
I agree, and I think that's not talked about enough from both parties, because it is so I am part of this channel is part of that too. I mean, I'm here to make money. I make money from the existence of this channel, specifically from companies that are gonna pay me to conduct those interviews and then distribute them. Right now, for me personally, I always call the resource talks rules. There's 3 rules. There's no questions off the table, so I can ask them whatever I want. There's no questions up front. I'm not going to send them a list of questions, and there's no editing rights. So if the company turns around and says like, "Hey, maybe you shouldn't have asked me that. Can you cut it out?" No, I'm not going to do that. Companies know that in advance, which is also one of the reasons why I don't have 50 clients. I have daily stuff in my inbox saying, "Hey, can you do an interview with us?" And I say like, "Yeah, sure, we can do that. These are the rules," and I never hear back from them. It happens all the time. It happens when I go to conferences and I'm like, "Hey, can I ask you a couple of questions?" And the CEO says, "What are the questions?" And I'm like, "I'm not going to tell you that." And they're like, "Well, I'm not going to talk to you." But it is, I think it's a good point to bring that to everyone's attention, that this is how this channel makes money, and there's a clear conflict of interest. This is one of the reasons why I don't make recommendations. Like with Alaska Energy Metals, they've purchased a set of 4 videos from me. One of those is only being conducted. There's 3 more to be conducted. And I mean, again, I'd like people to be aware of the fact that companies pay for these things. Whenever you see, but I'm not going to make a recommendation saying like, "Hey, you should buy this company because the best company out there." That's not part of the service that I provide, but that doesn't mean it's not part of the service that a lot of other interview channels or talking heads will provide. Unfortunately, it is often the case where they're going to take the money from a company and they're going to tell you this is the best thing since sliced bread, right? And they're going to tell you should buy this thing, but there is a clear conflict of interest. There's a lot more money to be made in people saying like, "Hey, give me the company, whatever company. I don't care about the quality of the company. Give me the money. I'll tell everyone to buy your stock." There's a lot more money to be made there. You can see that in some of these contracts out there. But what I'm ranting on about here is that everything that people consume, and I always say that this in my disclaimer, so people who've been following the channel for a while now will know this, but these things are not always going to be clearly disclosed. Whenever they watch a video, sometimes with Alaska Energy Metals, that's happened too. When in my first interview, I asked them about this, their marketing spend was through the roof. I didn't like it. I brought it up. I was like, "Hey, what's happening? Why is this the case?" They were spending $700,000 on G&A per month on average over the last quarter. I asked them, "Why is this happening?" They explained it to me, saying that it was they wanted to increase liquidity. They had a PEA coming, so they wanted more eyeballs on it, specifically U.S. eyeballs, because it's a U.S. project. They wanted to bring in, bring the attention of people interested in critical metals to it. The idea from now on is what they told me is to spend $150,000 a month on G&A, 15 to 20% of which is going to go into marketing. So that's going to be like 20 to 30 something grand a month to marketing. So like 200, 300 grand a year on marketing, which is not out of the ordinary. It's not a low spend, but it's not out of the ordinary. Hopefully they keep their word to it. Otherwise, I'll be bringing it up, of course, in other interviews. This falls within the thing that I said, no questions off the table, no questions up front. But with where I was going with this is that these things are not always going to be clearly disclosed with everyone out there. So you might be watching a video about, the critical metals shortage, and the host might just kind of happen to note, mention a company in there and say like, "Oh, there's a critical metals shortage. You know who's solving that shortage? Company X." And then toward the advert, which is what this is, they're going to say, "Oh, by the way, this was the sponsor of today's video." So I think it's safer for people watching any type of company specific content out there to approach it thinking that it is marketing. Approach it with skepticism and understand that everything that companies do online and offline too is marketing. Them going to a conference and talking to you, marketing. News releases, marketing. Presentations, marketing. Website, marketing. Their activity on Twitter, marketing. Coming on an interview, being mentioned by other talking heads, it is all marketing. Just like you would see an advert on TV only highlighting the best attributes of a product, that's typically how marketing would also be for these companies. So it's important for people to understand that this happens a lot. And again, although I know I'm ranting on here, Luke, hang on for a minute here with me. But there might be channels out there that try to be different. Um, it still doesn't mean that these things okay, I try to ask real questions. I spend my time researching the company, and that's not that I'm not trying to toot my own horn. Horn. Is that how you say it? Yeah, not trying to toot my own horn. What I'm trying to say here is that um, even though that is the case, these things should not be treated as research. Nothing that you see online besides what you're going to find on setterplus.ca should be treated as research. You go and look at the financial statements, you understand how much money they're spending on G&A, what portion is going into marketing, and then you're gonna ask about it. You're gonna go to management and you're going to look for a reason. Why are you marketing this? And they shouldn't be marketing if they don't have an asset that is marketable with Alaska Energy Metals. Specifically, their explanation was like, oh, we had this PEA that we think is marketable and we wanted new eyeballs on it. That's why we spent that much money. We're going to lower the spend from now on. And so, yeah, I said a lot there, but the companies should not be marketing if they don't have a project that is marketable. And they should always just have a clear reason as well as a clear ROI, just like we were talking about the unanswered question before with Nevada King. With this, it should be the same. Like, well, what's the goal that you're trying to achieve with this marketing? What would be a success? What will be a failure of this spend? And what if this fails? Like, what are you going to do for marketing if this fails? After it fails, what are you going to do for marketing? And if it's successful, what is that going to mean for me as an investor? Like, these are fair questions that I always try to ask and that people should be asking. So I said a lot there. I was kind of ranting on, but yeah, you can pick it up from here.
Yeah, and I think a lot of people sort of wish for the situation that there was no marketing or no promotion anymore.
Hmm.
If there would have been a button you click on it, and all the junior mining marketing and promotion stops at that point, then the industry becomes really quiet. I think there's almost nothing anymore that that you will hear because a lot of Twitter accounts will no longer work. You cannot ring the company anymore because you typically talk to a person telling you a story. I think a lot of insider trades stop happening because I think some insider trades are from a promotional point of view to show confidence. It's always a good thing, but there's a level of promotion in it. And indeed, a lot of news releases do not show a lot of news, but is marketing as well. Drilling in an area you already know is going to give you some results can always be explained as, confirmation, but sometimes it not always. That's very cynical, but it could be part of marketing too. Some companies hire people who are really good at, selling and can have a big network, can share it with their friends and their network and get people into a story, which is also promotion. And site visits, where technical people can review the project, typically is also promotion. So I think a lot of activities, a lot of tickets, restaurants, events around PDAC will all be cancelled because it's all part of promotion. So I think promotion, even though people may hate it, I think people need it to get their share of information from companies and to judge which companies are good. I think you can also learn from it. If you don't like a certain piece of marketing or promotion and it really puts you off, I mean, you've learned the lesson and you can go to a different company and invest in that company and call that company. So I think it's still crucial for companies to do it because if they don't tell their story, it's very difficult to know what they're doing and why they're doing it. But what's the real reason behind it? And I was thinking about it for a while, and of course, for junior mining companies, it's not the same as for a revenue generating company. When Heineken is promoting their beer at events, of course, they have more reasons than just raise capital to
There's
to
no
do
reason
to
to
do this.
promote Heineken. Let's be fair about that. But yeah, go on.
So I think in junior mining it's mostly raising capital and ideally at higher prices for the company and for investors, of course, ideally at lower prices. That's why I sometimes prefer to buy in the market because you decide when you buy, and when there's a capital raising, in most cases the company decides or one of the bigger investors joins in deciding because they make a deal with a lead investor. The other thing is liquidity, but why do they need liquidity? To get somebody an exit, which again is a cynical point of view. Like, do they want to have family and friends out, or maybe seed investors, or is liquidity a good thing because bigger investors can participate and you create a bigger audience for your stock? Again, you always have to be skeptical and always think as an investor like, why is a company trying to do this? I think if you have a lot of liquidity, investors get interest, because why is the liquidity? Are investors buying it? Maybe should I be buying it? Different algos will pick it up and may even buy it automatically. So I think liquidity is typically a show of strength and credibility if you have liquidity over a longer period of time in a stock, because it makes you realize, especially if a stock is going up on volume for a long time, it tells you that it's not just one person who's driving a stock, but there's liquidity behind the move. And the other reason could be an increase in market cap. But why do you need an increase in market cap if there's no real event behind it? Well, maybe because a company is setting up to negotiate for M&A, or to be part of an ETF, if you talk about bigger companies that may join smaller ETFs. So I think there's about four things: raising capital, liquidity purposes, increase in market cap if there's a deal to be made, and maybe brand recognition. So when an industry reputation, that you become part of a list of peers that are considered high quality, and you are among those companies. So a bit of brand recognition in this case. So
Mm.
those are, in my opinion, the four reasons that I could think of when thinking about the promotion topic. But I think at the end of the day, it all has to do with a rising share price, because that makes life easier for investors and the company if that share price is going up. But of course, ideally with real backing and not just a quick price increase.
It should be it should be in balance too, right? That's why whenever I'm interviewing a company, I start off by giving a company overview, and in that overview, I give some of the financial ratios, which is I call it the administration to exploration ratio. So how much money is going into the ground versus how much money is going into administration, and then within those two, what's happening. So that's the sort of the baseline ratio that I start with, and then I split both of them in two things. Administration, I typically split between administration and marketing. So administration itself, paychecks and whatnot, and then marketing. And then exploration, I would split into drilling and everything else, because sometimes in the financials, they would call it exploration and evaluation of the assets, but like 90% of the money would be spent on geological consulting or helicopters and whatnot, which whenever it's something eye-catching like that, you can go ahead and look for what are the biggest contractors for the company and are they related to the company, or you can just ask them and see how they respond to. So, but it has to be it has to be in balance. Like that's why I make these ratio, and promotion is obviously needed. Not, I was going to say promotion is fine. It's not only fine, it is needed when you have an asset. I mean, if a tree falls in the woods and there's no one to hear it, does it really make a sound? But it has to be again, it has to be in balance, but also the absolute amount matters too. And this brings me to Next Gen Energy. I mean, I did an interview with Next Gen Energy. A big part of that interview was focused on their marketing spend, because it's being dubbed online as obnoxious. Because although it might have been, I think Lee gave me some kind of a ratio of the money we spent on marketing versus the number of pounds we found, or something among those lines. Or like the companies would they tend to come up with ratios that don't really matter but paint a good picture. By the way, marketing, I mean, it's the same thing. When they come up with a ratio that's not like a traditional ratio like administration to exploration, that ratio is there as a marketing tool. So that's why you need to have your own independent ratios. But to your point about branding, what Lee Courier told me is that their spend, for example, was, I suppose it falls within your branch of branding, but he told me we're spending money on marketing because it helps us with community relations. So a lot of it is sponsoring local, I cannot speak today, but sponsoring local football teams. So community relations, for example. And then they sponsor F1, which to me, he said, is about attracting talent. He said the top engineers work at F1. We're going to need top engineers later down the road. I thought that was an interesting justification, to put it mildly. I know you have an opinion on that too, but I suppose that's two more reasons as to why companies do marketing.
Yeah, agreed. I mean, I have also my doubts about that, but to be frank, you cannot know. You don't always know the real reasons behind it. You can just trust your own instincts about, is the company doing the right thing. Um, these, I mean, is Next Gen doing the right thing by these promotions in Formula One? I doubt it, but maybe I'm wrong. I'm not completely sure. I'm not following that company anymore. So I think most important is, as an investor, you have to recognize, that promotion is always a thing and it's important, but you have to be happy with your companies, how they do it, and if not, then you should question those companies and ask them, what's the purpose? Why do you think it's worth it? Um, because again, if it would be an off button to promotion and marketing, then almost everything stops. It's really a big part of our industry, and of course also a bad part in a way, but also a good part in a way. There's a lot of funny things that are happening in promotion and marketing. Some people are really good at it. Some people are almost too good, where you feel like this is more a marketing story than anything else. And sometimes these things end up as a real company. Surprisingly, I was surprised how well Lithium X did, the lithium company founded by Brian Pace Braga at the time, and they brought it to a successful end. And I think promotion was a big part of it, to get that story to the finish line. So you have to be open to it, and if you don't like it, then if you then you have to look for a company that doesn't do it, which is a very short list, which makes life a bit easier, I guess.
True. You might want to forego the sector as a whole in that case, but yeah, I think there's. I mean, the couple of main takeaways here. Just always know that it's marketing. If you hear about a company somehow online, you heard about it because of marketing. So don't make an investment decision there and then thinking, "Oh, this is good. I want to buy the stock now." Critical minerals shortage. This company has critical minerals. Ergo, I should buy it. No, it was marketing. You bought it because of marketing. You were you were the ROI of that marketing basically. So don't do that. Second step is second takeaway I think for me was always check the spend, and it should be in balance. It should be check the ratio, make your own independent ratio. I call administration to exploration. You can do a marketing to a drilling ratio specifically. So exploration, not always drilling, as I mentioned. Um, and ask about it. I mean, there should always be a reason. They should be marketing, especially if it's a significant spend. There should be a reason. Again, something coming out, a change of direction. Maybe the company was a different company before. They changing direction for a certain reason, and they want to attract new investors to the story or create liquidity so that all the investors can get out. Whatever. There should be a reason, and there should be an end goal. Like the company should know what the ROI is. If they tell you we want to increase liquidity, how much do you want to increase it by? So be specific about it. That kind of those are the three main takeaways, I suppose, for me. Any other takeaways that I'm missing?
No, I think well said. I just think it's important to have it on your radar, and we will show. I mean, I think we'll show a couple of examples in this video as well. The ones that I think are interesting. And again, you are selling an interview, and if you are selling an interview, in my opinion, and you ask good questions, then the level of promotion that you do in your role as an interviewer is quite small, because you just ask questions, and the company has to answer those questions if they agree to the interview. What I do as Gold Discovery, I don't have many clients, but a couple of them, and I do also things behind the scenes, like helping them with images and visuals and graphs. But I also help them disseminate the news, and of course that can come across as promotional. And hey, if he's buying it, maybe it's worth having a look. And I am quite I'm very strict actually in the couple of clients I have, but still it is something that I like, not necessarily for everyone. So that means that it's more risky, because you do a service, you do an interview, and people pay you for your network basically. And if you pay someone to just give the opinion, Eric Coffin is also doing that. He releases his picks to the company through newsletters, and not all of them will do well, but he has a pretty good track record, I think, in finding good discoveries. I think he was early in Virginia, he was early in Nefson, he was early in Great Bear. So I think there's just three names that immediately come up right now, but he has way more. But he probably has a longer list of failures, I guess, because everyone has that. So I think there's value in getting information, as long as you put it in context to why do I get this, and what is the person's interest in this information. And I think that was the whole point of sort of going into this topic a little bit deeper than we typically do when a company goes up, because Alaska Energy was really, with $16 million of volume, something that stood out last week, and needed a bit of a review, I think, and that's why I think it's an important topic.
Definitely an important topic, and I think there's a lot of polarization out there. I mean, you basically have people who are going to say, "Oh, marketing is always bad, and whatever happens, we should, kind of poo-poo on it," and it works. I mean, it attracts an audience. There's a certain audience for that, for those type of comments. But I think in the end, it comes down to no one possesses any superior knowledge about what's going to happen and what's going to go up or what's going to go down. So everything you consume publicly about public companies should be taken with a huge grain of salt. And there's never guarantees, or there shouldn't be any guarantees. Even if someone is giving guarantees, there shouldn't be any guarantees. I always say that there's no guarantees besides that there are forward-looking statements in these conversations. Companies like promising a bunch of stuff. So the only two guarantees are that anything you'd consume online is marketing. Even the people talking bad about companies, it could also be marketing. It's not always the case, but it happens. So two guarantees: everything that you consume online is marketing, and the second one is there's always forward-looking statements. There's always promises that the company doesn't know if they're going to be able to keep. They might intend on doing it, but they don't really know. And so I'm saying this because I know a lot of people would follow one person, and whatever they write or talk about, they would be like, "Oh, this is my messiah. I just buy whatever they write about because they know more about this company than I do." Be that as it may, it's still marketing, and you should understand that. And you should dive a little bit deeper on and try to double check what they're saying by using, again, setterplus.ca is an official website of Canada. So it's setterplus.ca. And there's basically three main documents. I'd add a fourth one for the technically inclined people, but that's a technical document. So NI 43 101s. But the three main ones that anyone can understand by just reading are the MD&A, management discussion and analysis. It's the financial statements. Again, anyone can understand those. If I can understand it, literally anyone in the world should be able to do that. And then there's the management information circular, which also tells you how much, well, the main thing for me at least, is how much is everyone within the company getting paid. So at least those three documents, whatever you hear about a company, it's fine, you heard about it. That's kind of how the sector works on marketing. But go and read those three documents at least. And if you have someone to do a little bit of hand holding on understanding the NI 43 101 is also beneficial. But yeah, that's about it for me.
Yep, fully agreed. I think any piece of information you get is important in understanding a company, and I think it's crucial to know what your own strategy is, because I think a lot of people buy just because somebody says it, or the big names on Twitter or Rick Rule is saying it. I think you really have to have your own idea behind why you buy something, even if you're not a geologist or an engineer. Um, it's much easier to predict where people are going than to predict which discovery is going to be, which company is going to make a discovery. So sometimes it's easier to know where the marketing efforts are going to be, which company is going to be in the news in 6 months from now, rather than which company is going to make a discovery 6 months from now. And that's something I use all the time in my speculations and investments, to try to predict where people are going to be in a while. And we often discuss those type of stocks in this channel, or at least the days when I'm here. These sort of controversial small companies that nobody heard about. You cannot just buy every company that nobody heard about, but typically when you have signs that they are setting something up, the right people are coming in, and you see a certain financing, you see a sort of a rollback, things when the companies are restructuring, that's often a sign that something is happening. And this is even more risky perhaps than maybe perceived as more risky than the bigger companies, the more prominent companies. But sometimes that's where opportunity lies, and then you don't have anyone to tell you to buy it because nobody follows it yet. It's more a function of nobody is yet promoting and nobody is yet writing about it, and the plan is, or my plan is, to be there before it happens, to sell some when it happens.
I forgot to mention one other essential thing that you should look at, and that's satellite images. You want to have a subscription to at least just For people who don't know, I'm kidding because that's something you do. Like you dive into these things.
Well, not often. I mean, you can say that every time and make me look like like a fool, and that's completely fine. No, I tried that once with to follow drill rigs with the satellite and try to be a bit more informed than the rest. And
I don't think you're a
it
fool.
didn't really help me a lot, but it was interesting anyways.
I think that's awesome. I mean, the level of detail you go into, I know Ian Casso goes into a lot of detail on his own companies, although that's not often mining or exploration, but the level of detail you go into is amazing. Not a lot of people will do that. So I bring it up only half jokingly that you don't you don't have to go that deep because I think there's a certain level of feeling intimidated. At least it was the case for me. When I hear someone talking about a stock, I'm like, oh, they probably did all that. Like they looked at satellite images, they looked at this and that. Truth for most newsletter writers is they have absolutely no idea what they're doing. Like I always say for me, what they've a lot of them, not let's not say most, but let's say a lot of them have not looked into more than the website and the presentation. Some of them have looked into the financials, but not all the. And then you also have to think about do they understand it well enough? And then you also have to think, what about the level of bias? How do I deal with that? And so that's why I bring it up that for me there was a level of it feeling intimidated, like oh I'm never going to be able to do that kind of uh, that kind of stock analysis. And then once you actually read a couple of MD&As, you start understanding that it's really mostly text and it is understandable. It's not super easy. It's not easy for me. I've probably read 300 MD&As, something along those lines, maybe more. It's not easy for me still, but it is understandable and it gets better over time. So people should not feel intimidated and feel like, oh, I cannot do this because someone smarter than me has already done it. I mean, there's a certain need and there's a place for newsletter writers in the market as well. But just blindly trusting one person with your money is I don't think a good decision.
No, and best case is that you find it yourself, which is not always easy. But I do like newsletter writers as a sort of as a yeah. I mean, you cannot follow 2,000 companies. So if you really want to follow a big group of companies, at least screen them. I think newsletters really add some value, especially the ones that have proven over time that they also find things like this. Eric Coffin, by the way, also recommended founders medals, and that stock went 10 or 15x in 1.5 years time. And it's not easy to find these things again and again. So like I said, I think, and I mentioned Eric Coffin a couple of times. I have no relation with him. I like him because I sometimes meet him at a conference, but and he has. I don't know what his percentage gain is every year. I don't know if he even publishes it, but he comes up with good ideas, even though people would suggest that he is just selling whatever company is paying him. And I don't think that's well. I don't know his model, so I cannot say that's not true. I just know that he comes up with good names because he found Great Bear very early, Founders very early, Virginia very early, and a number of other ones do not come to mind immediately. And I don't think everybody can say that. And the same thing about Crescat. A lot of people criticize them, but they found Snowline early, Newfound Gold early. So
Sure, but
these
and
people
all of
know
them.
what they do.
But oh, I'm sorry for interrupting there. But all of them, specifically Kreskin, has also had a lot of misses, right? Um,
Mm.
like they've missed many times, and they play a different game than you. And I think maybe to go further on the lesson of don't just blindly buy whatever you hear about online. With Crescat, it's also marketing. I mean, they
It
often
is.
have positions in these companies. They want the stock price to go up. So maybe an even more general lesson would be know what the other party's incentives are. When you hear about a stock, what are the person or the party or the channel, whatever you might have heard about it from, what are their incentives to be telling you about this? Are they being paid? Do they have a position? Are they a director? Is their wife a director? I mean, what's the incentives of you? I think that's a kind of a big lesson in finance as a whole. Like, what is the incentive of your counterparty? And you can take it even further to how traditional money managers operate on the 2 and 20 fee structure. That might get us into another rabbit hole. But yeah, just know the incentive of your counterparty, and understand that no one possesses superior knowledge, and you should still rely and no one possesses superior knowledge, and everyone makes mistakes, sometimes not on purpose, sometimes on purpose. So just rely on yourself and the official filings. They're available to everyone again. It sounds like I work for setterplus.ca. I don't. I think it's a free service. I don't quite. I think it's a government service or whatever it might be. So, but yeah.
But again, I think it's interesting that we bring up Crescat, because I hear also, I mean, Crescat, um, and I mean, all these people, everybody has an incentive, and if you cover 10 or 20 companies or more than that, then there's a guarantee that you're going to have 10 or 15 losers. So I think the point is not that every company will do well, and I think about how many people can do this, play this game without having an additional income stream. Some people do this next to their full-time job. Sometimes some people are newsletter writer and get a monthly, fee from readers. Some people get paid by companies to write them up. You have analysts at banks. You have IR persons at issuers. You have CEOs. I mean, think about who you talk to on a daily basis. If you talk to people or you follow people, all of them have an income stream. How many people do this just based on investment gains?
Hmm.
Almost no one. That means that everybody has a certain level of a certain interest, some certain conflict. There's very little people who have no conflict unless you do it next to your full-time job out of mining, or you really do it without any stream of income. And that's why I think if you know that people are around already for 5 years, 10 years, 20 years, or longer, that person must be doing something well. Why can he otherwise stay around for so long? So I think in itself, if you have a name that's around 10 or 20 years, that tells you something. Bad actors could do that, but then again, if you do a bit of due diligence, you know uh, who you're dealing with and what the interests of that person are or is.
And but even still, and I know you have to run here, by the way. So maybe one last thing is that even if you only rely on your investment gains, it's it's a small space, right? And if you want to, if you're a private investor and that's what you live off, and you want to participate in private placements or you want to get deals sent to you from brokers and whatnot, you still kind of have to behave in the sector. Like you cannot go and bash everyone and expect to get the best deals out there. You want, when you find a project that you like, you want management to pick up the phone for you. And if they don't like you, I suppose they're not going to pick up the phone. I mean, if you bashed five of their previous companies, they're not going to pick up the phone for you. So even people who are not taking any money from the companies, they have an incentive to be telling you about it in a certain light. And even the one, there's very few people out there who are independent in a way that actually that actually works. I think Lobo Tigre is one of them. He's the independent speculator. I think he works with a group of analysts, and the way they're compensated is just by subscribers. So they take no money from the companies. I believe not even for site visits. That's how he tells it to me. Again, I'm not affiliated with them. I'm not selling their product or anything like that. But I do talk to Lobo a lot. And again, even me saying that is being biased. Like I get Lobo on for interviews, right? And so if I now say, why, I probably would if I thought he was, but if I say he's the worst person out there, he's not going to come on my interview. But I do want him to come on my interview. And so there's always a certain bias, and people should be aware of that. So we took this way far, but I think there's some good points in there. Rambled on. Hopefully I didn't say too many stupid things, although I'm sure I said a few. But yeah.
Yeah, right. I think it was good, and next time we'll have a guest again to join us to avoid us rambling on too much.
Right. All right, Luke. Well, thank you so much. What is one last thing I didn't tell you? I'm going to ask you this, but what else are you doing? Maybe we should make it a news segment. What else are you doing next week? What are you looking out to, any news releases? Are you following any companies? Are you going to any conferences? Anything business wise?
No, conferences only start again in September, so that's happening again in 2 months from now, 1.5 months at Beaver Creek. Other than that, summer is typically quiet. I'm not typically waiting for news. I'm just screening what companies are doing, screening all the news. I've got a couple of screeners that try to look for things that I wouldn't notice. Like today, again, I found some investors in private placements that wouldn't mention in the headlines. So I always look at who's buying it and is there anything to be learned from this person joining. But it's a quiet period. It's really a bit boring in a way if you really look for things, because there's not too much to be found, I think, in terms of news or exciting developments in companies. Um, So I just do the same thing every day, follow the market, and sometimes you find something and it surprises you, and you are busy the whole day trying to get a position and thinking about it and making phone calls. So that's my life these days,
Hmm.
just following the markets, which was different a couple of years ago.
Do you mean to say that the famed Luke ten Hove is just a normal person like the rest of us and does the same thing every day?
Yeah, you were good at framing people. You make yourself look like an idiot, and I think you're smarter than you are presenting yourself, or at least making people believe that you are. And making me look like a genius is also almost feels almost like difficult to listen to.
Almost, that's the only thing I can do well is make silly jokes that most people actually don't like. But I can do one thing well, and I try to do a lot of it. Good, Luke. Let's cut it here. Thank you so much for sitting down with me today.
All right, see you next week.